Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. It's a big day of data locally, with our fourth quarter GDP result out later this morning, preceded by the Fonterra half-year result. Either may have market-moving implications. But a few minutes ago, the US Fed released its latest monetary policy review and projections, and the dot plot indications and forecasts, which suggest they see higher inflation in the year ahead, now 2.7%, up from 2.5%, and a smaller economic expansion, down to 1.7% from 2.1%. They also expect higher jobless rates. They see 2 more rate cuts this year. 9 of the 19 policymakers expect it to be in the 3.75 to 4% range by the end of 2025. But at this meeting, there was no policy rate change. In contrast, the Atlanta Fed's GDP Now tracking suggests the US economy is now contracting at a 1.8% rate. Apart from the pandemic period, that would be their worst since the GFC. After 2 strong weeks of mortgage application growth, but mostly driven by refinance activity, last week there was a pullback with volumes falling 6.2% in the US. But with the rise in the US benchmark interest rates and the consequent rise in the 30-year home loan rates, their first rise in 9 weeks, perhaps this isn't much of a surprise. Still, overall activity is now 6% higher than year-ago levels. Tariff and tariff threats are raising prices for basic commodities. For example, American steel is up 27% just from February the 7th. There is no way that won't have inflationary impact there. Think cars. Interestingly, with international steel diverted, these costs will be lower elsewhere, so the core competitiveness of American-made products are probably going to weaken noticeably. Chinese steel prices are back to where they were in 2017. Across the Pacific, Japanese exports rose 11.7% in February from the same month a year ago, and this was the second best rise since December 2022, and much better than the 7.8% rise in February 2024. Still, it wasn't quite as strong as expected. Japanese machinery orders rose 19.8% in January from the same month a year ago, and the Bank of Japan kept its short-term interest rate at around 0.5% during its March meeting, maintaining it at its highest level since 2008 and in line with market expectations. It was a unanimous decision and a cautious stance, focusing on assessing the impact of rising global economic risks on Japan's fragile economy. They noted ongoing uncertainties in the domestic economic outlook, including trade policies and global conditions. And the Central Bank of Indonesia held its benchmark interest rate at 5.75% during its March meeting, as expected. They've only had one 25 basis point cut in 2025, which took their policy rate back to where it was for most of 2023. Recently, their inflation rate fell to only 0.8%, and there was a sell-off, a major one, in their stock exchange earlier in the week. So this hold may be their last. The financial instability in Indonesia is a bit of a worry, especially for its neighbour Australia. In Turkey, their autocratic president is feeling increasingly vulnerable. He has moved against his main rival with trumped-up charges, and the instability has caused the Turkish currency to dive again. Inflation is running there at 39%, but it is falling. And their central bank keeps cutting their policy rate, now down to 42.5%. And the World Meteorological Association's latest report for 2024 is a sobering read. New Zealand may be situated in a climate sweet spot, but that isn't the case for most of our trading partners. Carbon dioxide levels in the planet's atmosphere are now at an 800,000-year high. The future won't be like the past. The main way it will hit our pockets is through insurance costs. The US Treasury 10-year yield is now at 4.28% and up 1 basis point from this time yesterday. And the price of gold will start today at just on $3,034 an ounce and down a net $2 from yesterday. Oil prices are up 50 cents at just on $67.50 a barrel in the US, while the international Brent price is just over $71 a barrel. And the Kiwi dollar is now at 57.9 US cents and down 30 basis points from this time yesterday. Against the Aussie, were unchanged at 91.4 Australian cents. Against the euro, were also unchanged at 53.2 euro cents. That all means our trade-weighted index starts today at just on 67.2 and 10 basis points softer. And the Bitcoin price starts today at $84,613 and up 3.3% from yesterday. Volatility over the past 24 hours has again been moderate at plus or minus 2.1%. Join us for the Q4 2024 GDP result at 10:45 a.m. this morning, and before that we'll have the Fonterra half-year update. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.